Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be doing a Bitcoin round to discuss the current market conditions. We're going to try and gain some insight into Bitcoin's recent boring price action and how we should consider positioning ourselves going forward. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source of Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Bitcoin price live page here on lookintobitcoin.com. And as we can see, the month of July has been not great. As I said, fairly boring, but a little bit to the downside. We're currently down as I film this about 4.5%, dipping beneath our key support level of $30,000. And if we just scroll down a little bit further, we can see the fear and greed index is showing a pretty neutral market right now. Not many bearish or not many too bullish outlooks for the coming weeks and months. But if we scroll down a bit here, something that's really concerning a lot of traders and investors is Bitcoin's seeming underperformance compared to more traditional markets like US indexes such as the S&P 500 and the Dow Jones. We can see here Bitcoin, this orange line, is down, as we said, over 4%, while many of these indexes and stocks are actually positive in their gains. They've actually increased in price. And as Bitcoin is fairly correlated to these markets, it's a little underwhelming to see this decorrelation, this decoupling, but unfortunately where Bitcoin is decreasing in price, whereas other things are increasing in price. So we'll try and gain some insight into why that is happening. And first, I think we should look at the active address sentiment indicator. Now, this is comparing the 28-day price change in BTC compared to the 28-day average active address percentage change. So we can see here it gives us this more shorter term signal that we can use to try and predict Bitcoin's price movements on the more frequent daily, weekly time frame as compared to some of our other metrics which focus on more macro, monthly, even yearly perspectives. So if we just zoom in here, we can see on July the 13th, we actually crossed above this upper red boundary before very quickly on July the 15th, dipping beneath this. So once we cross above this upper red deviation line, this indicates that price is likely going to be topping out. And as we dip beneath, it usually indicates a more substantial price decrease. And if we just zoom out a little bit and zoom into the price section here, we can see Bitcoin's price actually in this local move peaked exactly on July the 13th and has since gone downwards almost without stopping. So a very accurate signal here on the active address sentiment indicator. And if we just go to the hash ribbons indicator here, we can also see very recently we have actually had a hash ribbons sell signal. So what this is doing is looking at the 30-day moving average of the Bitcoin hash rate, or the computational power securing the Bitcoin network, and comparing that to a 60-day moving average. And as you can probably immediately see, historically this has been a very accurate indicator. Once we see this blue line, or the shorter term moving average, cross beneath this longer term moving average, this indicates a hash ribbons sell signal indicated by these red or pinky areas here. And once we get this cross back above, it indicates a hash ribbons buy signal, which has historically been one of Bitcoin's best performing buy signals. But if we just zoom in again here, we can see that this has given us a hash ribbon sell signal, but only minor sell signal. We can see this is just fluctuating really close to these two moving average lines. So I wouldn't necessarily say this is a certain sell signal for the time being, especially as we can currently see that the 30-day moving average is regained above the 60-day. So this will probably give us another buy signal in the coming days and weeks if price continues to hopefully rebound a little bit. But what we don't want to see is this 30-day hash rate dip substantially beneath this 60-day, which indicates that a lot of miners are potentially turning off their machines, or are potentially a little bit too unprofitable, or maybe the hash rate has just increased so exponentially recently that it's hard to really keep up with that computational requirement to mine and secure new Bitcoins. But if we go just onto TradingView here, we can see I've just got the monthly chart loaded up. So this is just representing each of Bitcoin's price months throughout all its history. And if we just zoom in here, we can see, as it says, around 4% down on this current month. What we can do here is actually look to see that this current month has only had about a 9.28% price range, which might sound like a lot, especially when looking at traditional markets. A 9% swing within a month would be considered a fairly substantial price swing. But what I've done here is just created a custom indicator just representing the price range of all of Bitcoin's price history. So we can see here 9.28 is the current price range for our current month of July. But if we zoom out here, this value of 9.28 is actually substantially lower than what we usually see. And especially if we go out really far back, we haven't seen a price range this narrow since all the way back here in May 2015. So this is a really not boring as per se, but no volatility. There's absolutely no trending directional price movements within Bitcoin right now. We're very stagnant. I think there's a lot of indecisiveness in the market as we're getting, as we said, a little bit of underperformance compared to equities. And we do have some fundamental events coming into play, such as the new BlackRock ETF that may or may not be approved, a halving in under a year's time. And we're yet to see price really sort of live up to the hype that we kind of expected with these big bullish news events. So to lose the $30,000 support level maybe gives people a little bit more of a bearish outlook. But what we can do is go to something like the addresses holding charts, and pretty much all of these starting from 0.01 BT. So this is all of the Bitcoins on the network holding at least 1/100th of a Bitcoin, just keeps climbing exponentially. It's currently at 12.2 million unique addresses. This doesn't necessarily mean 12.2 unique million users, as multiple users can have multiple different addresses. But what we can do is just scroll through and see pretty much all of the what we'd consider retail sizes. So everything, like we said, from the 0.01 to the 0.1, the 1 BTC, and even up to the 10 BTC wallets over the past few weeks have just continued to accumulate, which is a very promising sign. Even in spite of not the most bullish price action, a lot of retail are continuing to dollar cost average, accumulate Bitcoin at these prices in anticipation for higher prices going forward. So as we said, even though we've had a lack of volatility, a lack of upside movements, things don't really look too bad, all things considered. And it's really unlikely that this low level of volatility will continue going forward. So hopefully we can see a break to the upside, or if not, and we have a break to the downside, it'll at least give us a better opportunity to accumulate at even lower prices. So just to summarize, the month of July has not been particularly exciting for Bitcoin price action, with the lowest percentile price change in over 8 years of Bitcoin's history, which, as I said, for a lot of people isn't the most exciting time. It can be a little bit boring just seeing price going sideways for days or weeks at a time, but it does give opportunities to accumulate, and hopefully we can see a more volatile break to the upside in the coming weeks. But we can say that we have begun to see a number of seemingly bearish signs, with a downwards AASI or active address sentiment indicator cross and a hash ribbon sell signal, and coupling those with Bitcoin's underperformance versus traditional assets, it's understandable that many people may have a more bearish outlook. And these contrast in bullish and bearish outlooks that people have in the short term for Bitcoin gave us that very neutral, almost level 50 on the fear and greed index. However, in spite of all of this, we do continue to see accumulation by many, and almost all retail wallets from 0.01 up to 10 BTC do continue to accumulate, and we see these wallet numbers continue to grow. And with such low volatility, it is difficult to predict the direction of our next move. So I would just say stick to your plan, continue whatever your strategy is telling you to do, whether that's dollar cost average into Bitcoin or to just constantly accumulate whenever we get a more short-term signal using one of the look into Bitcoin indicators. I would say stick to the plan and don't be fazed by this lack of volatility. It's almost certainly not going to last too much longer, and hopefully we get some more exciting times coming in the near days and weeks. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private trading view scripts, and more, or for a fraction of the standard industry price. And let me know in the comments down below and on social media, where do you think Bitcoin's price is heading in the month of August? Do you think we're likely to have a more bullish month, or do you think we're likely to see a little bit more downwards price action like we have throughout July, and are maybe going to have a bit more of a bearish month? As I said, let me know in the comments down below and on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.